Hazel Webb again with Idaho Mortgage Loans, and this is my mortgage tea. So today we're going to talk about all the different loan programs that we have out there. The basics of it is we've got FHA, we've got conventional, VA, USDA or RD, and then what we call non-conforming, which is everything else. And then I'll put jumbo in a different category, even though it's non-conforming. Okay. The ones that real estate agents deal with the most are going to be the first few. So conventional, VA, and FHA. So we're going to dial in a little bit on those. The more questions that real estate agents have is really when it pertains to the appraisal. Okay. So the appraisal requirements on VA loans is really misunderstood, especially in the area that I live and work in. The biggest thing that VA is very, very similar to FHA. It needs to be safe, sound, and secure. And it kind of depends on the appraiser that you get that determines if there's going to be required repairs. Ideally, there's a standard. Every appraiser has the same rule book, but just like everybody's opinion's different, it's the same on an appraiser. So I have a lot of times where sellers want to fix everything, or real estate agents, if you're new, maybe you're like, oh, this won't go FHA, or we have to do these things. It's a great idea to get the home looking nice and ready to sell, but don't spend a lot of time and effort trying to make sure that it meets an FHA standard, because you can waste a lot of time and a lot of resources in trying to second guess an appraiser. Just let the appraiser go out there, let him do his job, him or her, do their job, appraise the property, get the list of required repairs, and then you have a very specific list to work on. And honestly, they're going to be very basic. If you have peeling paint, you're going to have to take care of that. If you have a broken window, you're going to have to take care of that. Safe, sound, and secure. Basically, if you have a 2-year-old that can run around the house and easily injure themselves, falling off the stairs because there's not a railing, stick their hand on wires because they're exposed, okay? Those are the things that we look at for FHA and VA. So I wouldn't differentiate a ton. There is a difference between a FHA and a VA appraisal standards, but as real estate agents, that's not something that you need to dive into. It's safe, sound, and secure. That's what you want to focus on. Peeling paint, exposed wires, missing handrails, and then those are the basics. And then after that, let the appraiser do his job and then get them the punch list and then fix just what's on the punch list, because it's just too hard for you to know exactly what's going to be called out. I have had appraisers go out there and call out absolutely nothing. And I've had appraisers go out to properties that should have been just fine and call out a bunch of things. So again, as a new real estate agent, help coach the sellers on getting the house ready to sell. That's good enough. Then let the appraiser go out and do his job and then have that punch list. So that's my biggest advice when it comes to different loan products. The next one is a conventional loan. Conventional loans don't have the standards and the government overlays of safe, sound, and secure that the government loan programs have. So the conventional loans, there can be a lot of other things that go into it. Oftentimes, I will have somebody that can do a VA loan, and then sometimes it helps if I have them also pre-approved to go conventional, that we send the appraiser out to do a VA appraisal. If it's too out of scope and they can't come to an agreement between the buyer and the seller, have the opportunity to switch it to conventional. So I, as a lender, always like to have that as a backup option. It's not always feasible because a conventional loan versus a VA, there's a lot of differences in the qualifying features of that. But if you're working with a lender, you have somebody that has a VA loan, it's not a bad idea to ask that lender, hey, can they switch and pivot to go conventional if we needed to? That is good as a buyer's agent being able to go to the seller and say, hey, can you let us just try to go VA, because it is in the best interest of the veteran to be able to do that, but knowing that, hey, we can pivot conventional if we absolutely have to. And obviously those are tricky conversations to have depending on the level of trust and relationship between the buyer's agent and the seller's agent. So that's just a little bit of the information on those. I have had a lot of really strange appraisal things come back on different loan programs. I had just one the other day. An inspector came in, not an appraiser, an inspector. He came in and said, hey, I don't think these floor joists are going to go VA. And the agent called me on this and she's like, what in the world? I said, that's an inspection. That is not an appraisal. A lot of difference between a home inspection and a home appraisal. Buyers get them very, very, very confused. They think that an appraisal is an inspection. So as you're coaching your clients, make sure that they understand that there is a differentiation between a home inspection and an appraisal. They get confused because it's called an appraisal inspection. So then they think they're the same thing. So differentiate between the two of those very carefully and help them understand that just because it comes up on the inspection does not mean it's going to come up on the appraisal. Safe, sound, and secure. That is not county building codes. That does not mean that it has to meet current county building codes. Can you imagine if every house that was sold had to be brought up to current building codes? No houses that were built in the early 1900s, they would never sell. So that is a big thing to understand, that an appraiser, safe, sound, and secure, those are not building codes. Those are not home inspection standards. Those are just basics securing the property. So understanding there's a huge difference between the two. On that note, if you are the listing agent and you have a home that has had an inspection that has brought a few things up that there's concerned over, don't be afraid to go ahead, go get a structural engineer to come look at it and verify that the foundation is secure. That is going to help compensate for a lot of concerns that the buyers might have, because that's really what they're concerned about, is how much money is going to have to be poured into this, or is this a secure property? That was just one example. I've talked to several structural engineers and they have talked to me and said, you'd be surprised, most homes, even if it's got a huge crack here or there, they're still very structurally sound. So very seldom do I actually have a structural engineer come back and actually require repairs or say that it's not structurally sound. Homes can handle a lot, and that's something that we need to remember. And then not to be afraid of the appraisal, especially government appraisals. As a listing agent, yeah, if you have some obvious things like peeling paint, which technically, if the home was built prior to 1978 and there's peeling paint, the concern is lead-based paint, which would then, if somebody could eat the peelings, then it's not safe. Technically, they shouldn't call it out if it was built after 1978, but they are. So just be aware of that and just take care of the peeling paint, the obvious things. But again, don't overthink it. The other thing about appraisals is, we kind of talked about this before, everybody has their own opinion of what they think is safe, sound, and secure. You're never going to be able to guess what that appraiser wants. Don't be afraid of letting them do their job and then addressing the issues. Okay, let's think about anything else when it comes to loan products, specifically to appraisals. Let's say an appraisal comes in low, okay, and you have to go renegotiate an appraisal. One of the things that a lot of even lenders are out there sharing the appraisal is considered personal private information. That information only gets to go to our buyer. If the buyer chooses to share the appraisal with any other party, that is their choice. It is just like if they choose to give their bank statements to someone else. The bank can't share their bank statements, but you as the buyer, the client, you can share your personal information with whoever you want. So that's something that's very misunderstood. The buyer's agent, the seller agent, they don't automatically get a copy of that appraisal. That is now considered private information and has to be protected. So then how do you negotiate a deal if the appraisal comes in low? At that point in time, we ask the buyer, hey, do we have your permission to share? And oftentimes, I'm not going to share the entire appraisal with the listing agent, because then what's going to happen is they're going to pick that appraisal apart. They're not appraisers. So they're going to question every adjustment that that appraiser made and try to argue it on a level that they just can't win. So instead, the better course of action is say, this is what the value came in at. Then you can ask the agent if they want to provide, they can do 3 additional comparable sales that was not already included in the original appraisal. And we can go back and we can ask for what's called a reconsideration of value. So it's important that you as your agent have done your job and you have seen that there's other comparable sales out there. We then can present those to the appraiser, the original appraiser, and then he will put those additional 3 comparables on the appraisal or provide a reason as to why he didn't. So that's really important to understand that. That's really the biggest thing, and just understanding that reassert of value. What do you do if the appraisal comes in low? Those aren't things that are really happening in today's market, but I really wanted you guys to understand that's how you address that. If you, as the listing agent, have done your job and have already done your comparables to provide the purchase price for that listing, you are already going to know what's out there and know whether or not that it's feasible for that value to come up or not. And the hard part about it is it definitely is an appraiser's job to make those adjustments, and each appraiser is not going to do it exactly the same as the next. So you just never know. That's a little bit more about products and how appraisals come in and tie into those products. The next time around, we'll talk about different products and how that applies to their debt to income ratios and how we can get them into different purchase prices using different products. But hopefully that helps you have a little bit better understanding of appraisals with the different loan products, and that helps you in your next deal. Thanks so much.